I'm Matt Bishar with NAREITWeek.com. I'm here at the Waldorf Astoria Hotel in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Nelson Mills, the President and CEO of Columbia Property Trust. Nelson, thanks so much for joining us.
Thanks, Matt. Thanks for having me.
Now, Columbia recently signed a 30-year lease in New York City with NYU Medical Center. How significant is this transaction in terms of the overall portfolio?
Well, it's very significant. We were very pleased to get that done. We've owned this building since '07, and until recently, it's been fully leased by Jones Day. We were made aware about two to 3 years ago that Jones Day was moving downtown, relocating, and so we've been marketing and planning to release the building, frankly, on a multi-tenant basis. But late last year, NYU Medical Center emerged as a candidate to take the entire building. And after a few months of negotiation, we were very pleased to get that done. It was the largest lease expiration, near-term lease expiration in the portfolio, and we were very pleased with both the terms and the credit quality of the tenant. A major impact to our portfolio.
Now, sticking with leasing, how are leasing activities across your other key markets?
Well, just beginning with Manhattan, that's our second largest market. We continues to be very strong. So 2 of our 3 buildings are now fully leased. 229 West 43rd, the historic New York Times building, we acquired, mostly leased. It's fully leased today. The NYU lease we just mentioned, and our 3rd building is 315 Park Avenue South, and about half of those leases are rolling in the next year or so, which is why we bought it. And we're getting a lot of activity there at good rates and good terms, even beyond our underwriting pro forma. San Francisco there's a lot of conversation about San Francisco today, and whether or not it's reached its peak, but we're continuing to see very strong activity there. Again, exceeding expectations in terms of both rate and pace of leasing.
And are you on track to complete your previously announced dispositions for 2016? And how do you plan to reuse those proceeds?
We began a transition of portfolio 4 years ago to really transition to these high barrier gateway markets. At the time, we were in 32 markets across the country. We're now down to a dozen or so, and just a few assets left to sell to accomplish our objective. We have Key Tower in Cleveland that's currently in the market, as well as PSE&G's headquarters in Newark. Beyond that, there are just a couple of other assets, Dallas, Phoenix, Denver, that we need to sell to complete our transition, and we expect to do that in the coming months.
Nelson, thank you so much for joining us.
Thank you.
For more from REITweek 2016, be sure to visit REIT.com.